Good morning. This is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, the equity markets, they're still in an uptrend. Now, we've been in an uptrend since November 16th, and the markets haven't given up. Now, we're at a point where the crowd's screaming for a top. Everyone's saying we've gone too far, too fast, and it does appear that way. However, you got to look at the price and volume in the individual indexes and see what story they're telling us. For instance, if we look what happened last week, Monday morning the market just got hammered, fell down. However, that came in lesser volume. Tuesday, the market rebounded in extremely strong volume, closing up on the highs. Wednesday was kind of a flat day. Thursday morning, again, the markets tried to shake everyone out, went down in the morning, closed near its highs. And then Friday, we saw a gap up where the markets were all hitting highs. The only problem on Friday was the volume was kind of light. If we were hitting new highs, we'd like to see this happen on greater volume than the day before, and we didn't see this, and perhaps this might have been due to the snow blizzard called Nemo on the East Coast, and we'll find out the answer to that this week. We'll see how the markets continue on. Markets are slightly off this morning. However, again, the volume is running kind of light. Now, if you take a look at a weekly chart, let's say of the S&P and the NASDAQ, you'll see that almost every week for the last 6 weeks in a row, it's closed near its highs. And again, that's telling you this market does want to go higher. And again, if we take a look at the breadth, what's going on underneath the hood of the market, we see that, okay, housing stocks have been leading the market. They're pretty much taking a breather now. A lot of them have come into their 50-day moving average. You want to see how they act there to see if they bounce. But however, what we do have is financials now taking the leadership role. You have the big banks like Goldman Sachs, JP Morgan. You have a lot of the investment management firms starting to do very well, like Jefferies, T. Rowe Price, Waddell & Reed, BlackRock. So you have some leadership there. The refiners, you have a lot of stocks in the refining sector that are hitting all new highs, and that tells us that the cyclicals are participating in this market, as are automobile wholesalers, as are the airlines. And also, we saw the casinos last week. Casino stocks and stocks related to the gaming industry do pretty well also. And one of the things, the NASDAQ's in a sense been lagging this market a little bit. It's all been led by the small caps. However, on Friday, we saw the big NASDAQ names like Apple, Google, Amazon, Microsoft, Oracle, Qualcomm. They started participating in this rally. So when you have such broad participation, it'd be very unlikely that this market would just turn around on a dime and crash. You know, you can never be sure, but so you continue watching your price and volume, look for signs of distribution. So far in this market, we only got about 4 days in the NASDAQ, which is very manageable, and about 3 days in the S&P 500 in terms of distribution days, which are the higher volume selling days. So that's very manageable. Now, one of the plays, one of the sectors we like is the 3D printing space. So there's 3D systems, there's Stratasys, and there's a new IPO, just went IPO'd on Thursday, called X1, symbol XONE. I think that you can play these stocks. They're very hot. You need to be very cautious. A lot of volatility in these stocks. However, Stratasys right now is right at its 50-day moving average. Basically, tell you a little history of the stock. It broke out past the 69 area back in November, ran all the way up to $90, and it corrected. These stocks do have violent corrections. It came down to 74, which was a previous resistance, which now became a support area. And right now, Stratasys is trading right at about $80. I think you can add shares to it. Again, this is a risky trade. This is a very volatile stock, and using 74 right below that as your ultimate stop. Now, for full disclosure, I do own 3D Systems, that's symbol DDD, and I do own Stratasys, SSYS, and I still may be adding positions to these shares, but again, caution is advised. As always, let price and volume be your guide. Have a great trading day. This is George Tkaczuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.